Good morning, everyone. Oh, we got to move some lines around. I hope you all read that entry screen, the big warning. We could have a down day. It was meant to be a joke, of course. But just thinking about the future, maybe make a mental note of March 22nd of that entry screen, a down day. Not that I think anything of significance is going to happen here on the downside, because there's no evidence to suggest that. What we have and what we always have when we look at the charts is what was. And from looking at what was, we make assessments about what might be. So what we know happened is that the markets had a kind of just looking at this, a slightly upward sloppy correction through time. And it kind of like what we refer to sometimes as a self-correcting uptrend. Whereas, where it's totally sideways, like this was a wide sideways correction, which often precedes some type of a significant move. When prices have been going up for a while, that move is typically lower. And then tight sideways consolidations in an uptrend suggest higher, but of course they can break higher. Fail. If they do fail, they often begin with a breakout failure, where for whatever reason, sellers take advantage of the move higher. So this week we talked about several things, right? Even from last week, where some of these indices intraday, and they're marked on some other charts, was the head and shoulders top pattern that was forming on some of those indices intraday, and you could see it on the daily. It just wasn't as evident to see it, but we can point out. Anyway, what I said was, look, these type of things historically, and I think I told a little story about Dell Computer back in the 90s, how there was a big weekly one, and I mentioned how they can be violent when they fail, because these patterns are a display of distribution and beliefs, right? What all patterns are, beliefs, views as to what's going to happen. And when they fail, they tend to be violent. Now, I wouldn't say this is violent yet, but it's doing what typically happens when those distribution patterns fail. So yesterday, prices gapped up and they went nowhere. Right? They gapped up and went nowhere. So now there's another unfilled gap here, which, did it fill it yet? No, but I think it's a high probability that that gap will get filled. So from here, right, we do our factory work, and now I'm going to get another line. I can grab it. The lines are pretty close together. Did I grab it? No. All right, let's just put this one up here. And we'll just drag that one, because this should, yeah, it's there. It's hard to see when you got stuff overlapping each other. So you got a super significant major support level here. You got pivot lows here, pivot low there. Now it made a new high, so this becomes major support. And this line becomes what we call minor support. Let's just make it blue. What we want to see now, ideally, I tell you, ideally, it will not fill the gap today. I'm not suggesting it won't, because it's pretty close. But ideally, it doesn't fill the gap, because this came out of this sloppy consolidation and it continues higher. Anytime you see prices continue an uptrend, like this is a continuation pattern, what we call a 180 reversal. That's your move. You want to see a nice momentum move following that, because as it does that, your minor support is far enough away that where prices, if they should pull back to it, they do not put the trend in question or damage it. So that's what we would like to see, if that's in the cards today, to this. It doesn't have to go up today. It just shouldn't go down a lot. what we want to see is this pattern continue to move up, maybe toward 530, which of course is going to be next week if that's in the cards. And then as it pulls back to this 520 area, which is minor support, there'll be buyers there. And then, that's how you do the analysis of a trend without trend lines, without fib lines, without Ichikumi clouds. It's black and white. Anybody can do it. All you need is a few guidelines. There's higher highs, higher lows. What do I mark as major support? What do I mark as minor support? What is the price action that should continue a trend after it moves to new highs? And from there, if it violates major support, the uptrend is over, period. Now, in this case, as we look at this scenario, and it's not always that way, notice the weekly time frame has no pivot lows. So where's the major support based on that? We don't have it. And we will not have it because of this sideways consolidation that happened. This is where common sense comes into your analysis. This went sideways long enough so that if prices should break below this area here, this is going to damage the weekly trend in a relatively significant way. So we'll see what plays out into next week. For today, I would think, maybe it fills the gap, maybe it continues higher after the gap fill. That's where traders are going to enter longs or look to enter longs. If it comes down into this breakout bar, that'll give us some pause as to, that shouldn't happen after a resting period. But that's yet to be seen. So right now, consolidation, breakout, unfilled gap, was correcting yesterday. It did not fill the gap yesterday, so that was a plus. And now we'll see what happens. Black and white. SPX. Yesterday's strikes were not touched. Either one. Today's strike, there wasn't quite enough premium. Let me just look at this, but I figured it's going to come in a little bit more, and 51.90 would be where you would want to focus. 51.90. See, it's only 50 cents by 55 because things are jiggling around here. But I'm thinking it's going to come in a little bit at the open. So I would look for 51.90. You might have to do 95, but ideally 51.90. We shall see. But either like 95 is below 5,200, which is good. I've mentioned this multiple times. If you can get on the other side of the whole number, that's good, right? Because there's usually large open interest at those whole numbers, and they act as support or resistance. The call is not above the whole number, but it's above the half number. It's above yesterday's high. This is to where prices are. Spiders, just see, just at yesterday's low. And, the average range, 5-day average range is about 48, 49 points. So coming down here is beyond that. That's not going to happen. There's no significant news today, so that's why I believe that's not going to happen. That it's going to come down there, but you've got a whole number in minor support. Buyers should love to see prices come down there today to where they could be buyers. So, we'll see. The upward that's a bit close, but markets are down a little bit, so I'm not so sure about the upward one. Because this trend supposed to continue higher. The Dow, as you know, made all-time high, broke above the consolidation. So a little resting period, just missed touching 40,000. I suppose that should definitely happen next week. If not today, we'll see. The transports came roaring back. So, above the little, if you remember, we were talking about a small range inside a bigger range. So there's the top of the upper range, bottom of the range. came all the way back up, deep retracement. We're getting a green bar within this consolidation that's been going on since the end of last year. So we'll see if the transports continue to improve. Typically something like this will go up to the top of the range, and we'll see what happens. Does it go sideways at that point? Each time it's been there before, it falls back down to the bottom of the range. We'll see what happens. Yeah, FedEx gap up should definitely help gap this up. We'll see where it goes from there. I mean, these gaps on these earnings have been like crazy. Dan and Sam in the green room, those of you that are on social media, and they do these selling these options or doing spreads on these stocks that are reporting earnings, and they've done great with them. But these gaps are a little hair raising. So been a little, as Dan called them, sphincter moments. Anyway, I suppose this will gap up, and we'll see if it gaps up to there. Interest rates. Hey, we talked about being here. They should go up. It helped the market. This did not help. Up here should help the market. Now this pullback, we'll see where they're at here. They're right on these converging moving averages. Right. Now, moving averages are subjective, and I look to the left of them to see if they're aligned with any support or resistance, and they're not. There's nothing of significance here, but this midpoint has been a place of interest. As you can see, where it came up and gapped and moved up here, and over here, it stopped and moved down. This is meaningless, but it's in the same spot. Prices traded above and below. That's another one of our rules or concepts about interpreting the price action. So it'll be interesting what the 10-year does here at these converging moving averages, whether it tries to make a turn. So next week, we will be looking at this to see, did this make this turn to come back up here, which will be not a positive for the markets. But if it falls back down to the bottom of the range, the markets should like that. The 10-year, the 30-year here, you can see the same situation at the 10-year. The 13-week, which we talked about here, it went up. It's like, what's going on? Right? It's not supposed to go up there. Then it fell all the way back down. Right? Then it went, oh, maybe the Fed is going to tighten or think about tightening. Now it's falling all the way back down after this week. So you see this kind of head and shoulders top, you can see, which we'll continue to follow this into next week as to whether it actually breaks through the bottom here. And if it does, that would be a stronger, very strong indication that the Fed is really going to lower the Fed funds rate. I don't know, in June, different speculations. And now you can hear, rightly so, people starting to question, are they for real? How are they going to lower the rate, with all of these inflation concerns? So that's why yesterday was like, is what he's saying, is this transitory? Could he be right this time? He was dead wrong the last time he used. Well, I'm using the transitory. He said inflation was transitory. And so now, I don't know whether it's politics or not. We looked at commodities going up and oil going up and, different things that say inflation is getting worse, not better. Gold going up, crude oil broke out as it did. Broke out above resistance. That's minor support. Buyers should be here. They're stepping up in this area. Now, somewhere it can go below it a little bit, but you see the moving averages are starting to rise. The 20 is rising. The 50 is rising. The 200 is starting to flip up a little bit. So if this continues up and that 10-year holds those converging moving averages and move up, this market it's dealt with this kind of stuff pretty well. I mean, incredibly well since the end of last year. It's basically brushed off. Is this irrational exuberance? Time will tell. The dollar is gapping up today. You only get these dots, but look at that red bar, which looks like it's going to be a red bar ignored, which opens up the door to, what the hell's going on here again? And if does the dollar break out above that and start going up? And again, if those interest rates flip up again, we've gone through this, but we'll see. We'll see. This is what these rolling sideways corrections and self-correcting uptrends deal with. This is all uncertainty when patterns are like this. When something is trending with conviction, higher highs and higher lows without a lot of overlapping bars, well, buyers are in control. And if it's going down, sellers are in control. That's just the way it is. So we looked at this earlier in the week, right? Agriculture ETF. I mean, it looks like it's going to rocket higher. That's not good for inflation. All right. Bright spots have been retailing. Beautiful chart. Looks like it's going higher. Yep. BBY. Dan will talk about that. That's gapping up nicely. That's a play that we have. SMHs have pulled back toward support. That gapped up yesterday. Came right down to where it should. Turn around. Now let's see a little backing and filling here. There's one of those head and shoulders. It broke. Didn't come down here. Recovered. News. And IWM came back up into this not converging, but in between the moving averages and support. That came back up. It's down here a bit today. So yeah, today will, probably be a little backing and filling and trying to figure it out. Is it going to fill the gap? Is it going to go up, or are we going to go nowhere? So we'll see how it plays out. And like every other day. Bitcoin, it's down here, 1,000 points. Not a big deal. Be interested to see, does it come down to 60,000? Does it hold here? Does it flip back up again? So things are just consolidating here a bit. Rightly so. Ethereum off of the 50, and it's down a bit. I would love to see a retest here for a long. That would be great. All right, all yours, Dan. Alarm. Or BBY. All right, not many earnings, but I'm gonna go through the gaps first. I'm sorry, not the gaps per se, but my alarms. And alarms are either open trades or trades of interest. The BBY had some news. I don't know what it is. It's a beautiful turn at the multi-week turn. We bought over the red bars high. We sold half pre-market. Looks great. IIPR or core long. My 103 alarm, you see it up here, went off. This is a beautiful, what we call bull rectangle. Bull rectangle daily, 1, 2, 3 weekly, buy setup monthly. So we're in this thing core long. Looks fantastic for all 3 time frames in alignment. Let's see, Raul. On YouTube, asking about hold. Yeah, it's a sell setup. He's asking about a short, but it's therapeutic, so you better check about its bio-ness. Or I'll do it real quick. Is that a word? Bio-ness? Yeah, it's a bio-ness. So, I don't mind day trading myself, bios. Swing trades, I'll do it, but only in like 5% of the situations where it's a beautiful setup. All right, earnings here. Nike, bearish gap.
This has room to go to 90. That's a breakdown in the weekly. So I have no bias right now. I mean, other than lower. So to me, that is not a good zero DTE candidate put spread. All right, FedEx is one. Yeah, we didn't. This is an earnings trade, but we did a what's called a short strangle. We shorted the 230 puts, below what's all this, and we shorted the 297.5 calls, and we're taking some pain on the call side. So I'll be looking to get out here, hopefully at a profit. It's probably going to take a couple minutes, as always, for the spreads to tighten a little bit. But if we were not in the trade, I would 100% have this on my list as a zero DTE call spread. Big old gap on earnings after a 3-bar run into it, far from the 20. But these 3 bars, by the way, look at the volume. That to me, when you go to the doctor and he takes an x-ray of your body, this is an x-ray of supply and demand, right? This is a total x-ray of like somebody knew something. They were getting heavily long into this earnings report, and they're getting paid for it. So yeah, I'm cynical with Wall Street. You better believe it. So I kind of put the label of that as inside information. Raul's asking, how come biostocks are less tradable? It's not. The Raul, there's one very, very, very simple response to that. It's not that it's less tradable, but you have more intraday and gap risk because of biotechs are like permanent news items. And it depends, how concentrated they are versus how diversified they are. If there are 1 or 2 or 3 trick pony, and that you come out, the FDA comes out and says, "Oh no, we're denying your application," or demanding more information, whatever, or on the flip, we're approving it. Those things are going to have, most likely an intraday halt, and then you get so it's volatility is the one word answer. All right, Lulu. Yeah, I told Greg last night with our FedEx thing with these big old gaps. I was contemplating selling. I forget what number. I think I said the 400s though. 400 put spreads. I think maybe I said 410. I don't remember. But with these big gaps, unless you genuinely don't mind owning it, and this was a beautiful, beautiful, beautiful pattern. That if this opened flat, we would be buying it over yesterday's high. This is a beautiful bottoming pattern, daily, weekly. We got our bottoming patterns. We love the 50 to flatten out, 20 to curl up. We had a higher low, buy, it's perfect. But I'm just telling you about these naked calls and puts. They have risk, and when we go into this category, we are going into the lion's den. But you don't have to go into the lion's den. It's just a different strategy with different reward to risk. And Sam calls me fireman because I like calculated risk, not stupid risk, calculated risk. And and I take stop losses. I get burnt, but overall it's profitable. That's a beautiful pattern, Scott. Beautiful pattern, a 1, 2, 3 range expansion, closing breakout, bullish 15-minute chart. You get the award right now for the best new long setup. Now, yes, there's resistance right there. I have this talk with Alex all the time. It broke out, pulled back, consolidated over time. It's the concept of slowly absorbing supply. So the data suggests it's going to 26. So I'm going to put that in a window. Looks fantastic. But you know, I 99% of the time I don't well, I'm just talking about concept, and then we would have to apply the concept on a case-by-case basis. All right, EDR in a 5-minute window. I don't like trading the first 5 minutes. All right, wait, no, I messed up here. AMPX. I'm going to leave it on the list. Possible bottoming pattern. Let me set an alarm at 3 spot 12 for right now. Let me see if it can recover. AHR, this is a recent IPO, right? This is all the data I got, but it was a closing new high into earnings. Look, it gapped up to 8. Wow, that's a big gap at 18. Who the heck paid that? And now it's smacked right back down. So let's watch that. Air, I think 62.20. This would be a great 30-minute low day trade. Williams Sonoma. Well, I'm kidding. Whiskey Sierra gapping up a little bit to resistance, no interest. Puma was up. So this was going to be a 30-minute high long idea. We're getting smacked right back down. We'll come back to it. BBY we talked about. Tesla, I don't know what the news was, but that was a sell setup. Sell setup in a downtrend. RDDT, Alex, yep, came public yesterday. I'm watching it. I got it on a 5-minute chart on my other 15-minute chart on my other window. These are a couple from Sam I Am. UBS is a 1, 2, 3. You know, I would just love this pattern as a 1, 2, 3 buy setup that were closer to support. You know, that's the problem, because when these fail, you know, they could set up measured moves down. But I'll keep it on the list. FUL, I have an alarm up here at 8150. Well, I think I do. Let me make sure. No, I don't. 8150. Charlie McGee alarm. Up alarm, nice. Sam I Am. Charlie McGee. We got from Sam yesterday. 77.25. All right, so we're up $2. So what do you say we sell a third right here? Well, $1.50. All right, I got filled on my FedEx at 75. So beautiful. That turned a sphincter trade into a profit. Nice. So yeah, I think the lesson, Sam, that I learned, I got to do more of these condors instead of the nakeds. But yeah, that made my day so far, turning that into a profit. But look at the gap. Like I said, you know, you try to stay objective if you're in the trade versus when you're not. And this is still a call spread candidate, 0 DTE. So it's still on my list for a call spread. Let's see what the 300s look like here in a few minutes. Oh, shoot, that was the wrong, shoot. Okay, FedEx, I had I put it in the wrong window, so we're gonna actually get a better exit. It's now 40 cents. All right, so I got out at 75, but it's now 26. So had I waited 5 more minutes, I could have waited, made extra $50, but you know, you trade them a little different when you're getting out of a potential disaster. All right. All right, what symbol did you say? CWK. I would like it better if we get a buy setup. So another 1 or 2 bars down or consolidation. I personally have no interest in